All right, let's start. So, reporting requirement under Companies Act 2013, right? How suddenly we started studying about CARO? Like in some section of Companies Act, it should be written that auditor needs to follow CARO, right? So that is your section 143 subsection 11. Right? So otherwise, why would an auditor follow suddenly the CARO report? Something in the company, and that too only in the case of audit of the companies, because the Companies Act made that requirement very clear in section 143 subsection 11. Similar to that, there are other sections. Similar to that, there are other sections in which auditor is required to report on certain matters. Right? So CARO is applicable if that certain threshold is met, right? Applicability of CARO. But other sections are there which needs to be reported. So basically, in order to bring the transparency towards what is company doing versus what users of financial statement want to see, to bridge that gap, Companies Act has introduced all these all these sections, right? Section 143, subsection 1, inquiry into propriety matters. There are 6 inquiries you need to make. So you are the auditor. There are some propriety matters. Propriety, what is the meaning of propriety, or what is the essence of propriety? If you have 10 rupees in your pocket, whatever prudence you will apply before spending that amount, if you become the director or the management or any senior official of any company, you have to apply the same prudence, same vigilance. You just because it is company's money, it's not like you will not apply your brain and just spend that money anywhere, right? You are going to say something, add something on the propriety.
No, ma'am. We should make our company which is useful to the users. Actually, we should increase the not increase the value of the company. It is the duty of the proprietary to do that.
Propriety means like you are right in general sense, but here it particularly means that you want to bring transparency towards where exactly you have used the money of the shareholders and whether you have applied vigilance or not while you were doing while you were handling all those matters as a company director, board of director, or the senior official.
Whether we are using the money of the shareholders, whether we are using it correctly or not, where and all we are using it.
Exactly. Yeah. So basically, in order to check that, as an auditor, you have to make 6 inquiries, right?
Yes, ma'am.
Here are these 6 inquiries that you will make. First inquiry, towards loans and advances. That means company had money from the shareholder or bank as a borrowing and all, and they gave it as a loan to somebody else. Are you a banking company? No. Why are you giving loan to other people? Why are you advancing money to other people? Right? So if you're doing that, see, we are not saying no to it, but then you have to comply the Companies Act, and also you have to make sure that as an auditor, you have to make sure that you are also reporting it. So first, loans and advances. Second, book entries, journal entries that the entity is making, right? About those inquiries. You have to make inquiry about that like, certain, I'll tell you what is about the journal entries, but you have to remember that. Third is shares, debentures, and other securities, right? Company has invested into the shares, debentures, and other security, right? Then loans and advances shown as deposit, whether any loans and advances shown as a deposit, so you have to make the inquiry about that. Then whether any personal expenditure of all these senior people have been charged to the revenue account, right? They have gone on a personal trip, they have charged it on the company's account. Or are there any shares as allotted on cash, or cash has been sorry, whether it is stated in books and documents of the company that shares have been allotted for cash, and okay, so when the shares have been allotted for cash, whether you have received that money back or not, right? So basically you have issued the shares, and like you were supposed to receive the money, whether you have received all the money or not against that shares, right? So we'll go through all these inquiries one by one, but we have to remember the keywords under these six inquiries. First, about the loans and advances made by the company. Second, the book entries made by the company. Third, shares, debentures and other securities. Then loans and advances shown as deposit, personal expenditure charged to the revenue account, and shares allotted for cash. Right? Now we'll dig into each and every point. Just give me a moment. First inquiry, whether your company, your client has given any loans or advances to other people. Right? If the answer is no, nothing to be reported under section 143 subsection 1. But if the answer is yes, whether such loan is secured or not, you know, whether your client has taken any security. If no, that means that it is a non-compliance, that it will be reported under 143 subsection 1. Point A. If the loan is secured, whether the terms and conditions are not prejudicial to the interest of the company. So this is like applicable in both the cases. If it is secured or unsecured, दोनों ही cases में you have to see whether the terms and conditions of that particular loans and advances are not prejudicial to the interest of the company. Like for example, if you take loan, if you yourself take loan from bank, you need to pay interest of 10%, 12%, 15%. But you have given loan to somebody else at the rate of 3% interest. Right? So you are just trying to benefit someone just in the name of giving, like, you know, yeah, I'm collecting interest, but you are collecting interest which is substantially lower than what you would have paid if you have taken loan from somebody else. Right? So whether the company has made loans and advances, if no, nothing to be reported here. If yes, and if yes, whether it is secured. If it is not secured, that is a non-compliance. If it is secured, whether the terms and condition, if it is secured or not secured, in both the cases, you have to see for that loans and advances, the terms and conditions should not be prejudicial to the interest of the company. Done?
Yes, ma'am.
That is the first inquiry you will make. Second, during the year end, management or the directors, what they do, they make some book entries, right? They make some journal entries. For example, provision for expenses. Bill is not received, provision for expenses they want to take. That any entry that is just merely a book entry, there is no facts or transaction circumstances to support that, merely a book entry, whether they are prejudicial to the interest of the company. So we know that we are anyway doing accrual basis of accounting. So transaction, if not necessarily you will no, you will book the entry only when you have received the cash or you have paid the cash. So to take the advantage of this rule, because you're making an accrual basis accounting, your client might book some journal entries and later on they can just reverse it when the financial year ends, and then when the financial year ends and when the new financial year starts, they will just reverse the entry. But the problem is on 31st March, they will take the effect of that entry or not, right? If they want to reduce the profit so that they have to show, for example, the less profit, they will just book a expense just by merely a book entry, right? Or they can book, if they want to show the higher profit, they can just book fake sales and later on they can reverse it. Right? So if any entry, especially merely shown as a book entry, whether they are prejudicial to the interest of the company, you have to make an inquiry of that. Right?
Yes, ma'am.
No. Shares, debentures, and other securities. Whether company not being an investment or a banking company, you are not an investment and a banking company. Still, you have sold your assets such as shares, debentures, and other securities at a price which is lower than its purchase price. See, had you been an investment company, sometimes you can make that call just because you know that the market value is lower now, it is not going to increase, your purchase price was higher, right? So you like, for example, you are an investment company and you bought the shares for 100 rupees per share. But now the market value is 18 rupees. And it has been 18 rupees for about 3 years now. then you are like, should we do by keeping these shares? Let's just sell it. You will get only 18 rupees, but that is okay. Because this is just a law. But if you are not an investment company, still you bought a share and now you are selling it at a price which is lower than the purchase price, dude, no. If your company is doing something like that, as an auditor, it is your responsibility to report it. So just remember this point. Shares, debenture, securities are sold at a price which is lower than the purchase price. Right?
Yes, ma'am.
Company has given loan of 5 lakh rupees to the director of the company. Right? What accounting entry they will make? Loans and advances account debit to bank account because the money has gone. Right? Now, they have shown this amount as a deposit of rupees 5 lakh. That they have made a deposit for a certain period of time. Why? So they are just trying to show that they have given loan to someone, but they are just showing that we have just deposited that amount and we will earn interest on it. No, 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 no. You have to make sure that every loan is shown as loan only to other people and not shown as a deposit. Because if you show that as a deposit, people will think, okay, the companies had excess money, that is why they have deposited in the bank and they will earn interest and the money is secured. But if they, because, and that is why you are trying to deceive the people. No, people will think, yeah, money is safe, it is with the bank, they will get the interest out of it. But instead of that deposit, actually this amount is loan. And the people who have taken the loan, the director, and they may die, they may not return the money or whatever. The money of 5 lakh, this amount of 5 lakh rupees will never come back. So, but still they wanted to give loan. So that is why they have given the loan, but shown as a deposit so that nobody questions them. So you have to report whether any loans and advances made by the company is shown as deposit. Right? So now are we clear on the first loans and advances? Whether loans
Yes,
and
ma'am.
advances made, if no, no reporting. If yes, whether it is secured. If no, that is a non-compliance. If it is
Okay.
secured or unsecured, in both the cases, terms and conditions should not be prejudicial to the interest of company. Book entries, like any transaction or journal entry made just by the book entry should not be prejudicial to the interest of the company. Any shares, debentures, other securities sold by the company should not be sold at a price lower than the purchase price, except it is an investment or a banking company. And whether the company has made any loans and advances which are shown as a deposit. Right? Personal expenditure, fifth point, very easy. Company has made, like director, board of directors, all these people have made personal expenses charged to the company's revenue account. Again, non-compliance. Last point, whether it is stated in the books or documents of the company that shares have been allotted for cash. Company has issued shares for cash, whether that cash has been received. If no cash has been received, whether the position is stated correctly and not misleading. That means I'll tell you, see, normally when the shares are issued, money is already received in a bank account, right? People apply online, so they have to pay that money. But what if company is a private company and it is making a private placement to just its own relative and all? And they are showing that we have issued the shares, but we will get the money later. So if that is the case, in those kind of situations, it will come like that. In case of listed company, if there is an exceptional case, then also it may happen that company has issued the shares, but issued the shares in a lot, like, against cash. If yes, that whether cash has been received. If no, same position has to be correctly disclosed in the financial statement. Yeah, all the six inquiries. Easy, this one.
Yes, ma'am.
We are done with this one. Now, reporting of on accounts as per section 143, subsection 2. Again, an easy reporting. Right? Again, an easy reporting. As an auditor, you have to report you have to report what are the accounts you have examined and what are the financial statements, like, the balance sheet, P&L, notes to accounts, all these, whether you have that you have audited and whether the same has been laid in front of the members in the general meeting. Right?
Okay.
So whatever accounts and financial statement you have made, you have audited, you have to present that in front of the, or you have to make sure that they are laid before the members in the general meeting. Right? So
Yes,
that is
ma'am.
why your audit report are addressed to the members of XYZ company. Right?
Yes,
Second,
ma'am.
in your report, you have to write as an auditor that to the best of the information and knowledge, the said accounts, whatever accounts, accompanying accounts or financial statement are there, they are giving true and fair view of the state of affair as at the end of financial year and the P&L and the cash flow and other matters prescribed in Rule 11. Right? It is simple. So, for example, you must be wondering, na, why do we write true and fair? Why can't we write correct and not correct? Something like that. It is because the Companies Act says over here that you have to write whether to the best of the knowledge of your information and knowledge, whether the said accounts present give true or fair view or not about the state of affairs of the company and any P&L cash flow statement as mentioned in Rule 11.
Yes, ma'am.
Simple, right? So first, you have to make sure the accounts and every examined financial statement is laid before the members. And second, you also in the report, you have to mention to the best of your knowledge whether the same has been giving the true and fair view or not.
Yes, ma'am.
Done? Now, come to section 143, subsection 12 and subsection 13 plus rule 13. This is all related to fraud reporting, right? So there will be one case where the report should go till central government. And then will be one case when the report will go, your report will go to audit committee or the board of directors, right? When the report should go to, fraud relating report should go to central government, when the amount of fraud exceeds or equal to 1 crore. So if it is 1 crore fraud, from the India perspective, it is big, right? In Indian rupees, 1 crore fraud is a big amount. It needs to be reported to the central government. But if the amount is less than 1 CR, that means you have to report it to audit committee and board. Right? When will you find this of these kind of fraud? During the performance of your duty as an auditor. Right? You believe that an offense involving fraud has of such amount or such amount has been committed by the company, in the company by its officer or employees. Right? So this is the case where the fraud is committed in the company by the officer or employees. The auditor shall report to central government within such time and manner as prescribed. Right? Auditor prescribed, amount prescribed in Rule 3 is 1 crore or above. Rule 13, fraud Rule 13. Amount is 1 crore or above. The report should go to central government within the time limit prescribed in the rule in form ADT 4. Cool? Now,
Yes, ma'am.
report to audit committee and board when will happen? That
If
you
the
have
amount
noticed
is
the
less
fraud.
than 1 crore.
Sorry. Yes, yes.
Amount is less than 1 crore.
1 crore, right? And so basically amount, they always say amount less than or more than a specified amount in rule, and in the rule they have prescribed that amount, right? So you have noticed, or during the performance of your audit you have come to a situation, or it has come to your notice that fraud has been committed. Auditor shall report such matter to the audit committee under section 177 or board in other cases within such time and manner prescribed. So whenever they write as prescribed, because they can always change that manner and they can change that time limit. And changing law is always difficult. Changing rules is not that difficult. So that is why all these things that can change easily, that number and the time limit and all that, form number, everything that they specify in the rules. Normally, this is how law is written, right? So this is how you should also cover. So keep that amount 1 crore or more, central government less than 1 crore, audit committee or board report. Done?
Yes,
Easily.
ma'am.
So I think we are through with this. Yeah. Section 143 subsection 4 says whenever in any of these points means section 143 points. So while you are making all those inquiries and reporting, if the answer is no in any of these cases, I mean non-compliance. So if the answer is negative or with a qualification in any of the inquiries that you are making in section 143, section 140, subsection 1, sorry, section 143, subsection 4 says you have to explain the reason why are you saying that. Right?
Yes, ma'am.
That is all. Section 143 subsection 9 says, as an auditor, you have to comply with the auditing standards. So it's not like that you are doing the audit and you can ignore standards on auditing. See, ICAI told you to do that as part of SQC1. Here you have to do it in case of audit of company, because Companies Act also makes it mandatory for you to follow accounting standards, right?
Yes, ma'am.